Bitcoin's future as a world reserve currency? Experts debate its potential amidst rising global debt and market instability. From Japan's monetary woes to altcoin performance against Bitcoin, we'll cover it all, plus 7 coins poised for a summer surge. Find out why some analysts predict Bitcoin could hit $200,000. In the latest video from Altcoin Daily, Brian Armstrong, Coinbase CEO, discusses the ballooning U.S. and global debt, suggesting Bitcoin as a potential solution and even a future world reserve currency. He believes that buying Bitcoin is a way to survive the impending debt crisis and points out the correlation between all-time highs in U.S. debt and Bitcoin prices. He predicts Bitcoin could reach prices in the high dollar 100,000s. Swan Bitcoin's chief investment officer agrees, citing the increasing institutional and corporate adoption of Bitcoin. He also predicts Bitcoin reaching the high dollar 100,000s or even mid dollar 200,000 due to the inelastic supply and increasing demand. While the concerns about rising global debt are valid, the idea of Bitcoin becoming the world reserve currency anytime soon seems like a stretch. It's true that Bitcoin's decentralized nature and limited supply are attractive, especially during times of economic uncertainty. However, Bitcoin's volatility and the lack of widespread adoption among governments and financial institutions remain major hurdles. Even though more companies are adding Bitcoin to their balance sheets, it's still a relatively small portion of the overall market. There's a lot of speculation in the crypto market, and it's important to separate the hype from the reality. The correlation between Bitcoin's price and the U.S. debt ceiling doesn't necessarily imply causation. It's important to have a measured perspective. In the latest video from Crypto Rover, Bitcoin's current consolidation phase is analyzed, highlighting the $110,000 resistance level. A potential drop to $97,000 is mentioned if support levels break. The video discusses large liquidity above $111,000, negative funding rates indicating accumulation, and BlackRock's $240 million Bitcoin purchase, though no Ethereum purchase this time. The video references the M2 money supply, comparing Bitcoin's movement to gold, and suggests gold peaking could benefit Bitcoin. A symmetrical triangle formation in Bitcoin's daily time frame suggests a potential breakout. Despite recent weakness, Ethereum is expected to outperform Bitcoin, with a breakout above $2,600 being key. The video mentions geopolitical tensions, but emphasizes that historically, these periods of fear can mark market bottoms. The channel also promotes a 10% deposit bonus on Bitcoin C exchange. I find the comparison between Bitcoin and gold interesting, as some analysis I've seen recently suggests a decoupling between the two assets. While gold is nearing all-time highs, Bitcoin's correlation with it has weakened. This could indicate a shift in investor perception of Bitcoin as a separate asset class rather than just a digital version of gold. The market's reaction to geopolitical events is also noteworthy. Increased tensions often lead to volatility, creating opportunities for both gains and losses. In the latest video from Lark Davis, he talks about 7 coins he thinks could see big price jumps this summer. He starts with Solana, saying it could double in price, especially with the hype around a Solana ETF. He then mentions Litecoin, also anticipating an ETF, making it attractive to regular investors. Ethereum, despite a tough period, shows promise, especially with staking in ETFs offering a potential 3 to 5% return. Pepe Coin is mentioned as a high-risk, high-reward option linked to Ethereum's performance. Virtual Protocol, an AI project, is another pick, benefiting from the current AI craze. Finally, he discusses 2 real-world asset plays: Plume, a newcomer with a $200 million market cap, and Wormhole, a more established project aiming to connect different blockchains for asset transfer, currently valued at $350 million. I found recent news articles suggesting a growing institutional interest in real-world assets. This aligns with Lark's picks of Plume and Wormhole, which might be interesting long-term investments. However, I'm more cautious about meme coins like Pepe, as their value is heavily driven by hype and can be very volatile. The ETF discussions around Solana and Litecoin are definitely noteworthy, but it's important to remember that regulatory approvals are never guaranteed and market conditions can change rapidly. In the latest video from Ben Cowan, he discusses the altcoin market's performance against Bitcoin. He points out that altcoins have reached a ratio of 32 on their Bitcoin pairs, a level predicted back in June. This drop aligns with the ongoing quantitative tightening (QC) and speculation that the Fed funds rate exceeds the neutral rate. Historically, altcoin valuations against Bitcoin tend to bottom out around 0.25. While a slow decline along the current trend line is possible, a sharper drop to the range lows is also anticipated. Ben highlights a previous pattern where altcoins bounced on their Bitcoin pairs following FOMC meetings, only to decline weeks later. The 2016 to 2017 cycle saw altcoins bottoming out in November 2017, suggesting the potential for a similar delayed bottom. He also examines the performance of Link, which appears to be breaking down against Bitcoin, potentially foreshadowing the broader altcoin market. Considering these factors, Ben predicts Bitcoin dominance will likely rise to 66%. Ben's analysis of the altcoin market using Bitcoin pairs is an interesting perspective that contrasts with the typical USD valuation. It seems he expects the altcoin decline will continue. This viewpoint appears consistent with the current uncertain macroeconomic conditions. In the latest video from Coin Bureau, Nick discusses the potential for another global market crash triggered by Japan's monetary woes. Last summer, a small interest rate hike by the Bank of Japan, BOJ, sent shockwaves through the global financial system, causing a massive sell-off in various assets, including Bitcoin. This was due to the unwinding of the yen carry trade, a popular strategy where investors borrow yen at low rates and invest in higher-yielding assets elsewhere. Now, the alarm bells are ringing again, but this time the issue lies within the Japanese government bonds, JGB market. Yields on these bonds, especially long-term ones, have been skyrocketing. This suggests a loss of confidence in Japan's financial health, given its already massive debt-to-GDP ratio of 263%. The BOJ finds itself in a difficult situation. Raising interest rates could stabilize the bond market, but also cripple the government with higher interest payments. Keeping rates low, however, fuels inflation and weakens the yen, making imports more expensive. This precarious situation is spilling over into the U.S. Treasury market, as Japanese investors, historically large buyers of U.S. debt, are now selling their holdings. This adds further instability to the global financial system. Nick points out a curious correlation between Bitcoin's price and JGB yields. As Bitcoin's correlation with traditional assets like tech stocks weakens, its price seems to mirror the rising JGB yields. This could mean investors are moving away from government debt and into harder assets like Bitcoin as a hedge against potential fiat currency instability. Nick concludes that while the situation could be just a temporary blip, it's worth watching closely, especially the Bitcoin-JGB correlation. A potential collapse of the JGB market could have dire consequences for the global financial system, potentially driving demand for Bitcoin. Japan's economic situation is definitely something to keep an eye on. The country's debt is enormous, and the BOJ is stuck between a rock and a hard place. It's interesting how Bitcoin is acting almost like an inverse JGB, potentially signaling investors growing unease with traditional finance. While nobody can predict the future, Japan's situation might be a preview of similar problems brewing in other heavily indebted nations. This makes alternative assets like Bitcoin even more relevant in today's economic environment. In the latest video from Crypto's Russ, George discusses the impact of Israel's strikes on Iran's nuclear program. He points out that during times of uncertainty, people often turn to safe havens like Bitcoin. He notes Bitcoin adoption tends to grow in regions experiencing turmoil. George mentions GameStop's plan to raise $2.25 billion, partly to bolster its crypto strategy, primarily focusing on Bitcoin acquisition. He also discusses Anthony Pompliano's new Bitcoin buying group, aiming to raise $750 million, and a proposal for Polkadot to convert 500,000 DOT to Bitcoin. George observes Bitcoin's price movement mirrors the M2 money supply, suggesting future dips are likely. He concludes with an observation from Clio, noting a repeating pattern in Bitcoin's chart, hinting at a potential breakout. While the connection between geopolitical events and Bitcoin's price is complex, it's understandable why some see Bitcoin as a safe haven. The current situation is certainly volatile, and it's interesting to see institutional players like Game stop increasing their involvement in crypto. However, the market is unpredictable, and relying solely on current events to predict Bitcoin's price can be risky. It's crucial to consider multiple factors, including macroeconomic trends and technological developments, before making any investment decisions. In the latest video from Crypto Banter, Alejandro discusses the rising club wars narrative in crypto, focusing on central limit order books, CLOBs, and their advantages over automated market makers, AMMs. He points out Hyperliquid's success as a CLOB-based DEX on its own L1 and introduces Zeta Markets, now Bullet, a project building a CLOB on Solana as an L2. Zeta Markets had issues with Solana's infrastructure limitations, hindering CLOB functionality. Bullet aims to overcome these limitations using Solana, Celestia, and Ethereum technologies, allowing for high throughput and low latency, crucial for market makers. Alejandro emphasizes the potential for Bullet to capture a significant share of the Solana DEX market, especially if Hyperliquid experiences negative events. He mentions Drift, a Solana-based perpetual DEX with a $500 million, fully diluted valuation, FDV, and $151 million in daily volume as a benchmark for Bullet's potential success. If Bullet launches in Q3 as planned and matches or surpasses Drift's performance, it could present a strong investment opportunity, especially with the trend of users migrating to DEXs. It's interesting to see the evolution of DEXs in this move towards CLOBs. While the tech behind Bullet sounds promising, the crypto market is notoriously volatile. A project's success doesn't just depend on superior tech, but also market timing, community adoption, and regulatory hurdles. The comparison with Drift provides a possible valuation framework, but many factors can influence how Bullet performs. The integration of elements from different ecosystems like Solana, Celestia, and Ethereum adds another layer of complexity, and it will be important to see how these work together in practice. Hyperliquid's own future and regulatory developments around DEXs are also elements to consider.